Good morning to all of you in the Devil Dog Day Trade community. My name is Michael and I'll be taking you through my day trading setup process for today, December 6, 2021. Special welcome to all of you who have served or are serving in the armed forces. And of course, we do save the best for last here, and a most special welcome to all my fellow Marines out there. Semper Fi, Jarheads. For those of you joining us for the first time today, we are on a journey together, and we have people from all skill and experience levels as part of this community. There will be information presented, however, in multiple ways based on everyone's understanding and experience. If there's anything that you hear or see that you don't understand, please don't hesitate to post a comment, and we'll make sure that we get around to answering that as quickly as we can. Just a reminder that the feed can be delayed up to 30 seconds on YouTube, so if you don't get an immediate answer back to a comment, that could be why. However, I will be checking for comments throughout the entire session, and we do have time set towards the end of it to make sure that we do cover any comments or questions that have been posted here. So, one of the first things that we do for each show is to review anything that happened in the past 24 hours, or in this case on Mondays, what happened over the weekend. And then we also look to see what's happening in the next 24 hours. And to do that, we check Forex Factory to see if there are any impactful events that could affect our day trading setup. It was nothing really big that happened over the weekend, so nothing to talk about there. And as we look here on Monday, the only red folders that we see here, which are areas of high impact, surround areas that we don't actively look at today. So that's the Great British Pound and also the Australian dollar. Those are the only two events happening today. So we don't have to spend any time looking at what might impact our trading setups for today. So starting off with our index and correlation markets, let's look at the DAX. This is a German market. It's been open for a while now, so it's a good indicator of what may happen with the U.S. markets when they open later on at 9:30 Eastern Time and Monday. So let's go ahead and start at our weekly view here. And what we see is we do have the DAX market now has come into a weekly zone. And we did get a little bit of movement out of that last week, and we would expect to see continued movement up here. As we look down and left, we do have a couple of other areas that may be of interest as well, depending on what happens. If price goes down through here, where we could turn around at. This is another pretty solid area right here that we'll keep an eye on. But again, these are weekly zones. These are very, very large zones. So price would have, it usually takes a few days for price to get into these areas here. So let's now jump down to our 60-minute zone just to see if there's anything that we can take advantage of throughout the actual day today. And looking here, and we're really, we had a couple of areas that we looked at late last week, right after price came into this weekly zone, and price did come back up through there. I'm not seeing anything here that is of interest to me for trying to get back short on, especially now that we're coming back up from this very strong daily demand zone. So nothing here. Again, the expectation is that price will continue to move up from this area, but we'll look at the other index markets across the other larger areas across the world to see if we get confirmation that multiple markets are looking to change direction there. All right, we'll switch over to TradeStation for our main charting platform, and we'll start with the dollar. Again, we do that because the dollar is the global currency for us, and so therefore we know that it can impact just about every single market out there. So let's start off again with our weekly time frame here, and just very quick, you can see we price did come down into our weekly zone down here. It was just 5-6 weeks ago, and is continuing to move up. And there is nothing that we have listed on our chart here that we think price could stop it. We've got a little bit of consolidation forming right here, where you've got all the weekly candles that are all relatively in the same boundary areas right here. So we would expect a move out of here sometime in the next this week, maybe even next, depending on what the next couple of days look like here. But again, we're still just continuing in this move up at this point. Jumping down to our daily time frame, see if we can get again a little bit more of a shorter time frame view. And here we've got, again, a really good view of this consolidation pattern. Just draw this out real quick, right? You've got price just continuing to move down here, and then price on the bottom just continues to move up. We are, I would say, at this point, right, this consolidation is almost ended, and we're looking for that bigger move, from here. It wouldn't surprise me at all because of just the way that these markets do move as they move in a direction and then do small corrections. For these bigger moves, we could potentially get a drop out of here down into this daily zone here, and then another move back up that's just based on that overall weekly move. But we'll monitor it, and we'll pay attention to it accordingly as price gets into these areas here. As of right now, though, there's just nothing significant that we're looking at that we're going to try and use. I'll pull up a 240-minute chart. This again gives us a good indication of what price has done recently, and you'll see here that we did come right down into this area, this zone that we have right here, and price moved out of it very, very well. Has continued to move up here, so we are in just an overall upwards move here. Nothing up and to the left that we're interested at this point until we get to those daily zones that are in the 98, 99 area. And I know probably might feel like I'm moving a little fast here. I'm trying to just get through as much as we can. Feel free to pause or to look back on this after this show is over, and you'll get you can kind of take your time as you look at these individual areas yourself. On a 60-minute chart here, so this is what we're really going to look at for activity throughout today's trading day setups, and I'm just kind of looking down through here, down and left, see if there's anything that really jumps out at me as of interest, and there isn't. Again, look up and left. We've got this area that's already been used here, and I would say you do have a little bit of a corresponding zone right above it. I would look for maybe a small movement out of this one, but when you have two zones stacked on top of each other, whichever one works, usually greater than like a 5 or a 6 to 1 move away from the zone. Usually that means that entire area has been consumed for a bigger move. This top zone here could still potentially move price back down again. So we'll look and see if we've got this same picture on the Euro chart. If we do, then that gives us that additional indicator that this area could work. All right, and that's it for the dollar. Let's move over to the VIX now. This is volatility index, and again, just a reminder: VIX goes up, U.S. index markets typically go down. VIX goes down, U.S. index markets typically go up. And we are in an area of very high volatility right now. We had this spike over the last couple of weeks. Pretty substantial one. Right, got us above, this line of resistance right here. So we're above that. We're approaching another area where you've got, these 3 wicks over here to the left. You could call this another area of resistance because it's not an actual zone, right? It's above this area here. And so we're really looking to see what's going to happen here, right? Is our price going to continue up through here as markets fall, or is it going to, is this strong enough that we're going to push the VIX down from here? Again, no clear picture on the weekly zone. Just note that we are, well above kind of what the average volatility has been over the past several weeks now. Jumping down to our daily time frame. We have this used up area above us right now. Hang on, let me zoom in on this. We've got this area up here, which was used, and as you can see, when we go back over to it, it was barely touched. So fairly high probability that this area will have, considerable more unfilled orders in it and imbalance. So it wouldn't surprise me at all to see this area work again. Should the price movement come all the way up into there. However, we're well above, approaching and close to being above the upper band of our Bollinger Bands here for the 2 standard deviations away. So not as likely that price will continue to move up there unless we do continue to see those bands move up as well. But again, not a clear picture here of what price is doing even on the daily chart. So let's take a look at our 240 minute, just to see if there's anything else that we could potentially use here. And the only thing that I see that jumps right out at me on this one is we do have our negative divergence on RSI. So it's just an indicator. I'm not going to trade it, but it's an indicator that price may be looking for this corrective move down. Right, price is moving up here. And down at the bottom of our chart, we look at our RSI indicator, and RSI is moving down. It's 3 points of negative divergence here. Pretty solid indicator that we're going to see a move down. Again, we can't use this because there's no zone related to it. But again, it can help us understand where price might move next when it's moving between these zone areas. Down to the 60-minute area, let's see if we can find something that's going to help us out today. And we still, nothing up and to the left, so we're not going to try and look for anything up there because there's no price action for us to look at that's close enough. We still have this unused area down here that's not it's not a high quality zone, but it is a zone. It meets our criteria, so that's why we have it marked. I would not be surprised at all if price comes down here. We're going to get some movement out of this area, but at this point, I wouldn't call it as anything going to be anything significant. And again, we're just looking around for any clear zones, and we just don't have them. There isn't anything here that we can use to actively trade today. And don't go any lower than a 60-minute chart on the VIX, just because I haven't found those lower time frame ones to be much of a help. Price typically just goes through them or doesn't respond to them well at all. So from here, let's go look at over at our Forex markets. So this is the euro. So this is where we're looking for that corresponding view of what's going on with the dollar. This will be the opposite correlation of that. On a weekly time frame, we are still in this fairly significant move down. We haven't had a correction in a few weeks now, so it wouldn't surprise me to see a bit of a correction here, and then continuing the move down until we get to one of our stronger zones down here. We've got this pretty solid area right here that's marked on the chart. I would say that we've got another one as well right here. Technically qualifies as a zone. The formation isn't quite as clear, and so this will be one that I would just mark area of interest, and then as price comes up into it, we'll look on lower time frames to see if we get confirmation that this one's going to work for us. Jumping down to the daily time frame, we are seeing we did get a little bit of a correction here from our overall move down. Right, we had this move down here. We got the correction up, not quite up into the area that we were looking for it to turn, but now we're starting to just move back down again. However, as you saw on the weekly chart, it wouldn't surprise us to have price come back up a little bit more on this correction, and then continue the overall move down. We're not going to change this zone that we've drawn out here. It's still good, still solid, and still something that we would look to trade. On the 240-minute time frame, we had a little bit of an unusual event last week where we had a zone work very well 2 times, and very, very well 2 times. So just keep that in mind, right? There's something that you just want to track for yourself, and certain securities do lend themselves better to using multiple times. I know a few people that trade options on stocks and ETFs who can use higher time frame zones like a 240-minute zone 3, 4, 5 times in a row. But that's because they've mapped it, they've tracked it, and they've adapted their rules, their trading plan to those specific events. Again, because we didn't use this the second time around, I'm not going to use it if it comes back up in here a third time. I am looking for this retracement a little bit higher. That kind of lines up with those other daily and weekly areas as well. As I look down and left, there's nothing here that I'm interested in getting into at this point. But just to be transparent about this, right? This area here technically qualifies as a zone, but again, this will be a counter trend trade. It's not inside of a larger time frame zone, so very low probability that you're going to get a big move out of it. I could see price moving here a bit, but certainly not enough to take for a longer term trade. All right, 60 minutes chart. We'll see if we can start get into what we could potentially get into on a day trading basis here. Let's zoom in on this area, and you can see we're in this overall just downwards move right here. We're down and left, up and left, and there's nothing here that's of high probability interest. We've got to have price, got to get out of this area here. We'll call this, this is our white space area. We needed to get above or below before we're interested in anything here. And we'll take a look at the 15-minute chart, right? See if there's any really, really quick, shorter term trades that we could get into. Just keep in mind the overall trend here, the past few days is down, but it's still all within this, what is this? 1, 2, 3, 4, 5, 6 candles here. So right, an hour and a half time frame, and we've got price trading in the middle of this, for days and days and days here. These are these low probability areas that we talk about, right? It's going to be difficult to get in on anything long term or anything big for when you're sitting in this major candle area here. But on a shorter time frame here, let's look, and if I look up and left, I've got an area that I'm somewhat interested in here. Let's do this. Right, this area here. And the only reason I'm interested in it, right, it does meet the qualifications for a zone. Was trading in the overnight session, but it price did not come up and break this candle and wick over here. So it means there is a probability that there's some reasonable unused orders here. I would probably still look for another indication, another odds enhancer that that price is going to change here before just jumping into this. But it's we'll go ahead and mark it off as something that we'll track. All right, let's take a look at USD JPY, Japanese yen here, and on a weekly time frame, you can see we are still in this move up. We've had a couple of corrections here. We're in the middle of a correction right now. You could to some degree call this an area. It doesn't truly meet the qualifications. This candle right here technically is a base candle. It's not a leg one in, but it has a couple of other good things going for it, right? If you look back and left, you can see prices change multiple times in this area. It's on a weekly chart. Let's draw it as an area of interest, and then we'll watch it on lower time frames to see if we could potentially use that for getting back on this bigger move back up. All right, daily time frame now. Let's see. So we still have, price is still coming back down again, and it's part of that corrective move on the weekly time frame. We've hit a little bit of a line of support right here, right? We've got both these candles came down and couldn't quite break through this. We're looking, a little bit lower here. This would be a fantastic spot to get back in on this overall bigger move up, right? We would get outside of the white space here. Chances are you'd probably be below the Bollinger Bands here, and you've got good, strong, defined zones. So look for, when the price gets down in here the next day or two, this would be a great place to take a trade at. 240-minute time frame, we've got this same type of a setup here where you've got, below the white space right here, price is coming down. We've got a nice zone sitting right below it. Another good area to jump in on this, and I don't know why we didn't see this one over here, but you can see we do have this area right here that has already been used. It was a zone, probably just wasn't high probability looking back and left, and it was a potentially counter trend trade as well at the time. We'll say it's been used, has been touched, but just note that this price may not come up through here very quickly once it gets back up to this area. All right, 60-minute time frame. We are still having this overall move down here. Looking for it to get down a little bit lower to hit our 240 or our daily time frames there. Because of that, if we look up and left for any areas to get back in short on this, just none of it makes me really comfortable. Looking to get long down here as well. These two areas right here qualify as zones from a structure perspective. This one is, you got, this is could be a base, could be a leg candle, but you can see you got the overall drop, base, rally structure. So that's a good indicator that this one could work. And then you have the zone lower here. I would say only if price comes up and breaks this pivot high right here. Once you do that, you know that you've neutralized the downtrend, turns these into actual potentially tradable zones, but only if price breaks up here. A 15-minute time frame, again, shorter time frame, last few days, we're still in this downtrend right here. We didn't, this pivot low here did not break this one down here. So you've got a indicator that we may be reversing a trend at this point. So technically you are in a neutral trend state, which means you can take trades either way. If I'm looking up and left, I don't see anything that I'm interested in strong enough to come back down in a short time frame. Down and left, we've got these areas right here, and then this one right here. Shorter term trades, I wouldn't go too long on them, but yeah, these are both solid areas. Again, just if your trading plan allows you to take neutral trend state trades, then that's what you do here. Just remember, we are not in an uptrend yet, so taking longs, this is not not the highest probability trade. All right, moving on to our futures area. Let's take a look at crude oil. We had some significant movement of this over the last few days of last week. And from a weekly chart perspective, we did not hit any of our known areas that we were looking for. We did hit this double bottom area right here. It's not technically a zone, but just note that formation, right? That's it's just one of the ones that you look for when you see two candles that end at the almost exact same place, have little to no wicks themselves. That can sometimes be an indicator of other lower time frame zones in those. We'll take a look at that as we go down through the chart. So it wasn't unexpected that price could move when it got into this area here, but it's not anything that we take as an actual trade. We're still looking for this area down here at 52, where we'd see a very, very strong area and to take another trade in. So nothing on the weekly time frame here, other than this is a good solid correction off of this multi-week move up. So if price does not come back down and break these areas here, this is probably the area where you start looking for longs again. But we'll confirm that on some of the lower time frames before we just jump into anything there. So let's look at that on a daily chart. What did we see here? Okay. Again, a little bit better of a formation, but still nothing that we're going to take. It doesn't meet any of our qualifications for a zone, but at least the formation is starting to firm up and like this. Okay, there may have been something here that actually changed this price. Here, as we look up and left, the only thing that we have here that's of any interest at all would be this, rally base drop area right here. Because there's no other formation alongside of it, and looking to the left of it, you've got a couple of small indicators of price change here. I would just be a little bit leery of this one. And again, it's a weekly time frame, right? You're talking about, more than $1 worth of risk, so more than $1,000 per contract. So this is one of those great spots where look in this area, try and find something smaller, some indicator that price is going to change rather than just taking that entire area up. So on a 240-minute chart, let's look back and left and see if we can find what that formation was and why it could have changed. I'm going to zoom in just on this spot here, and then we'll just slide over to the left. And what I will sometimes do is just draw a line here so I know where I'm looking for. And you can see here, this we actually do have the exact formation that we are looking for. So I'll move that out of the way, right? You have this drop, base, rally here formation. Now, you can say, well, why didn't we take that? So my rules are, especially with something is moving down that far, I've got to have a clearly defined zone in a higher time frame before I'm even interested in looking lower. I'm using this as an example to explain when you dig down deep enough, you can usually find the supply and demand imbalance where price changed, and it's just going to be up to you and your individual rules of whether or not you're willing to take that. When you've got price falling, let me just quickly go back over to this weekly time frame, right? When you've got price falling in this manner over 1, 2, 3, 4, 5, 6 weeks straight, you want to be very careful about trying to figure out where it's going to turn. You really want to look more for that confirmation that price has turned there. But when you go over to the 240-minute chart, you can see and tell exactly why it changed in this area here, right? You've got a reasonable amount of imbalance on our structure here, and sure enough, price turned right before this area here. This is a good indicator of that we're probably going to have a trend change now. So we'll look for a couple of other confirmations, and then we'll start looking to get on other longs here. One of those confirmations is going to be this area right here. I'll just draw this line, move it up to here. If we can get price to come back up here and then come back down and not break this area here, and so that would have set us, we'd have 2 higher highs, and then we'd have 2, one starting here, next one here, and the next one above it, higher lows. That would be a confirmation of a trend change, 240-minute time frame, which means then you could take a trade down in the 60 or 15-minute area. But as we're looking at this right now, there's nothing here that I'm interested in getting into right now on a 240-minute time frame. So let's go down and look at a 60 just to see if there's a better indication here. And we've got this same overall look, right? Prices continuously come down, and we are still in a downtrend. We've got to break one of these pivot highs here to reverse that particular change. So zoom in on it, right? And so our line is right here again. It's the same spot. So it was on a 240-minute time frame. It's 69.53. If we can get price to break there, and then when it does its next correction down, it doesn't come down and break this one, confirmation, trend change, look for longs moving up from there. And then the only thing that I would say to caution you against on that is you do have this formation right here of a rally, base, drop, with 2 base candles coming out of this drop. That could stop you, stop this move up. There's 2 zones on top of each other right here. They meet just about every one of our criteria for strong zones to take. The only difference is again, if price comes up past this 69 area, 69, 50 and change, you're going to confirm that you have a trend change, which means this trade would be a counter trend trade on your 240-minute chart. Let's jump down to a 15-minute time frame and see if we can see anything that's worth taking here. And 15-minute, we actually do have a neutral trend state now. Right, we had price that was coming down, 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 both lower highs and lower lows, and now we have taken this pivot high out with a new high, but we haven't, done anything. We haven't confirmed it with a second one coming up into this area here yet. So that's what we're looking for on the 15-minute chart. We get that again, then we'll be looking for additional longs here. As I look up and left, and I'm not going to zoom in on this until I find something here. So as I look up and left, I don't see anything that I'm interested in. Same thing down and left yet. I wouldn't take any longs yet. Let's wait and make sure price comes back up above the 69.50 area, confirm that we're in that that trend change state, and then we'll look for some additional longs there. Going over to gold, so GC on our futures chart. Starting again with the weekly time frame on Mondays. So we can set overall context. We are still looking for price to come back down to this weekly area right here, right? This is white space. We're just bouncing back and forth between it. We might be getting a little bit of consolidation too, as price movement is getting a little smaller and smaller here. There's no zones to take here. Nothing we're interested in taking a longer time frame until we get down to the 1630 area here that this weekly zone is sitting in. So going back to a daily time frame now. And again, you can just see, generally speaking, right, we still have this overall same picture. Price is still moving in the same area. This is all white space right here. We just got to be careful. We want to make sure that we're not jumping in on anything that's unfavorable towards us until we get outside of that. And as I'm looking, down and left, is anything that I see here that I'm worth taking. This long wick right here means that there's some pretty decent imbalance right below here, but we would need an actual zone to trade there, and price has to get down to that particular area. So nothing on a daily time frame that we're willing to look at for right now. We go into our 240-minute time frame, and we talked about this a little bit on Thursday of last week. I didn't have a session on Friday. We talked about this a little bit on Thursday of this area. We were looking for confirmation that we were going to get price to change in this area, and we did get it. We did see that change on a 60-minute time frame, which will have allowed us to take this trade. And because it would have been a little bit smaller risk, you probably would have targeted out already because it was a counter trend trade, unless you've got maybe one contract sit on as a runner that you're just going to move the stop up and see if we catch this big move up. What I'm looking for here before I confirm that we're going to look for additional long-term trades here is this same area right here. Right, we've got to break this area here to set a new higher high to confirm that we have a change of trend state. Right now, we are still in a down trend. I'm going to be careful doing longs. Those are counter trend trades. Once you get into neutral state, then things open up a little bit more. But this is the line we're looking for, right? 1790. If we break that on a 240-minute candle, then we open ourselves up to some additional long positions here rather than just short ones. Let's jump down to our 60-minute time frame and see if we can get some additional confirmation that may happen. We still have this area above here at 1816 that I'm considering use because basically this just missed my entry point for my trade there, and I don't take these trades more than once, but it wouldn't be unreasonable to watch this area. It's a high enough time frame you could watch it down on a 5 or a 15-minute chart, and if you see price come up into here and you get a confirmation, either negative divergence on RSI or some other indicator that price is changing here, then that's when you could potentially use this area again. We're still in a downtrend. I'm looking up and left. I'm not seeing anything that I'm interested in. I look down and left. I'm not taking any longs on a 60-minute chart here, so I'm really not interested in anything down in this area right here. Looking at a 15-minute chart, is there anything that we're interested in on a very short time frame today? And again, so the same thing, right? We're in a neutral trend state on this lower time frame, which means we could take another long position here, very short time frames. But as I'm looking down and left, I've got this area here. This would have formed on Friday, which is why we didn't see it because there wasn't a session on Friday. But as you can see, it's already hit, and there's not a lot of strength there, right? Price is still not coming, up and broken this kind of downtrend line right here. So this is probably a weaker area. You've probably heard me say this before. I'm not a fan of taking lower time frame in gold. They just tend to not work for me. I don't do a good job of picking them, so that's why I typically stay away from the shorter time frames, like a 15-minute and below when I trade gold. But we'll monitor this and just see if it's something that does work. Again, we missed it because there wasn't a session on Friday. But it is there. You just need to make sure that you pay attention to that if you're taking any shorter time frame trades on gold here. Moving down to natural gas. Again, some very significant moves down in natural gas over the last couple of weeks. And it's brought us right into our weekly time frame, our weekly zone. Let's change the color on this real quick so we can see it a little better. And we'll zoom in. So we've got this area right here, right? Entry point. Actually, as I'm zooming in on this, right, the entry point really was very specific about it. Was right here, about 37. Price did come down into here. I think this is a fairly high quality area. If you look left, that's one of my kind of first things that I look for. I want to see price changed in other parts of the chart. This is just above these two pivot highs here. So that's why I'm a little hesitant on using this one. I would look for confirmation that price is going to change here. So we go into our daily and 240 areas. Let's look and see if we can see some negative RSI divergence or some other smaller time frame zones in the same area. That'll give us a good indication of whether this is one where we want to go ahead and jump into for a longer term trade. So a daily area. And this is a really good example of something else that can happen on futures contracts as well. And so it's a good talking point real quick. You can see here I've drawn this area as an area of interest. When we weren't going to take this one automatically, we were going to wait and see if we had price change in here. And so what happened was, even if you had a trade setup placed for this, you'll see here when price closed, on Friday, it hadn't come and triggered here. But when price opened on Sunday night, price opened right here, right at 3.767, which would have been lower than your entry point. So this trade wouldn't have even triggered for you. So it's a little bit of protection there if you get this, if you get like a large gap like this from an overnight perspective. But it's one of the reasons why you track areas. Natural gas is one of the ones. Crude oil is another one that can have significant gaps over weekend time frames, and so you just want to be very cautious as you're trading those over the weekend. Just be very, very careful. You can get these big moves that can blow out your stops, and completely miss them, and you would just take some additional losses there. But basically what we did is we proved that this area wasn't worth looking into, so we can delete that. Now, we were looking at confirmation of this area here in that weekly area. We don't have any, right? So there's no negative RSI divergence. We can see that down here in the RSI chart. As I look, left on this, I'll just draw the line to make it, very easy to see. There's no zones over here either that show up on a daily chart, so that we don't have any confirmation here and nothing else that we're interested in looking at right now on a daily chart for this. So let's try a 240 minute and see if we have anything interesting here. So I won't zoom in on this area yet. Let me just look to the left. First of all, let's check RSI, and I'm dragging my mouse over here, and for some reason you guys can't see the actual pop-up that happens on my cursor, so I'm just looking at a comparison of the actual price points themselves right now. You can do the same thing on your chart. I'm trying to find if there's any negative divergence on RSI, and I'm not seeing any. So again, no indicators even on a 240 minute time frame that price is changing here. Let's look left, and here I do have something. I'm going to zoom in on this. So So what we have here, right? So price came all the way down to this area right here, and we have, I'll draw it this way, right? You've got 5 base candles here. Yeah, so you could actually go all the way up. Technically speaking, you could go all the way up to these areas right here. I brought it down to this area down here because as I look left, this is the area that this zone took out. So it's a little bit more of a probably just there's less risk here, right? So we want to make these positions as small as possible, but still capture them. Yeah, so you do have this area here. If I go all the way back to the right, not quite hit it yet. So I would be looking for price to move a little bit further down, maybe into this area. And if I got it down here, and I had a little bit of negative divergence on the RSI, those are great indicators. That's how you would take that weekly zone and potentially use it for confirmation that price is going to change in these areas here. 60-minute. Let's see if we've got anything of additional interest here. We do still have the area right up above. Zoom in real quick. Price has come up to it a couple of times right here. You can see that, but it hasn't gone into it. So I would still say this is a high probability area. We just double check here. We have any negative divergence on RSI, 2572 to 2579 to 26. We do. So we've got a little bit of negative divergence on RSI on the 60-minute time frame. I would probably look for one more point of that. And as you can see here, right, this is all lining up. If all these things happen, right, this is the way that you take these trades on the weekly time frame. If price comes back down again, it would give you the third point of negative divergence on RSI. It would be probably be below the lower Bollinger Band here and in a 240-minute zone that is embedded in a weekly demand zone. That's when you take that trade. You've got multiple indicators that it's a high probability trade. Those are the ones that you can give a high level of confidence in that they are going to work. So we'll watch that throughout the day. If we get some of those indicators, I'll send a message out to the community so you can take a look at that yourselves. And again, if it meets your trading rules, then I would, that's one that I'm confident taking myself. I'd say it's high probability that that's going to work. 15-minute time frame. We'll just look at this here. Again, we're talking, 60 daily zone or weekly daily zones right now. We want to be very careful of how we play in the smaller time frames here. We are still in a complete downtrend. You don't want to do a counter trend trade on a small time frame here. So you might want to look something like this area up here, right, where you've got the gap coming out of here. Maybe the one right above it. These are good formations. The candle structure isn't perfect, but the formation is pretty nice. Wouldn't be the end of the world to take something here just as a quick day trade. So we'll watch these throughout the day as well. I mean, price may not even get up to here today. Might be more like tomorrow or even Wednesday. All right, let's take a look at Nikkei. NK on our futures chart here. Japanese index market. It's been open all night. Again, these are the good indicators of what U.S. markets might do when they open. And just the first thing I do every time I open up charts is just the real quick sight picture across all of the time frames. And if you've been watching this show recently, the first thing in my mind is we are in a significant consolidation area, right? You can see it on every single time frame here from the daily on down. Price, and I'll bring up in the 240-minute chart here just to demonstrate it, right? But you got this exact same picture on every single time frame where price is, price movements just going down and getting smaller and smaller. The lows are getting higher. Your price is moving back and forth. You're going to get it to the squeeze here, and then it's going to pop, and it's going to go one way or the other. The problem is you don't know which way unless you have a good, strong zone sitting outside of either of these areas. So that's what we're going to look for. Can we figure out which direction it's going to go? We've already said, right, the DAX looks like it's going to continue up. Dollar looks like it's going to continue up as well. Recently, the dollar and the index markets have been correlated. Oftentimes, they will be opposite correlated, but they have been correlated recently, which is a good indication of a stronger overall financial picture for us. And so on a weekly chart, let's look at the Nikkei and see if we've got anything here that would show us that it's going to continue up too. And all we have here is this area that we, again, dashed line, look in the little legend at the top of your screen. Dashed lines mean area of interest, not something we're going to take automatically. Price has already come into here once, but barely touched it. On index markets, particularly on high time frames, until a zone has been completely compromised, in other words, price goes deep into the zone, high probability that these ones work, right? Index markets are designed to go up over time. So they always, have the lean towards long positions on index markets. That's why we're comfortable using those zones more than once, especially on the higher time frames here. So we got a pretty good indication that if price comes back down here, it'll hit this area again and continue to move up. So that works in our favor for the our overall view of markets recovering from this short correction now. Let's go down to the daily time frame, see if we can get additional confirmation of that happening. And as you can see here, what we have is another area, another zone in the close to the same area, right? But this one has been used 1, 2, 3, 4 times. Would not use this one again, right? Would not trade this. Keep this in mind, though. It is clearly an area of very strong support. It means we have a lot of unfilled orders here, a lot of imbalance. So just keep that in mind. That just watch price action as it gets back down into here again. I absolutely would not take a trade in this area unless we get below it, deeper into that weekly area there. And then up and left, we still have this area up here that I have already called as just I missed the entry. Here you can see price came up and very close to it 2 times, and it just didn't trigger the order. Price has now moved out well past my original target there. So let me just go ahead and change this for us so you know. I'll still monitor it. It still might work, but it would require confirmation on my end. Back to the 240-minute time frame. I think we already looked at this enough, right? There's nothing up and left that we're willing to go on, nothing down and left either until we get into that weekly area. So we're not going to get any help from the 240-minute time frame of where a price could move for the Nikkei. Going down to our 60-minute time frame, right? It's that same picture. I'll zoom in to see if we got any indication of which one of these might work. And so we're in a downtrend. So let's look up and left first. We've got this area right here, and it's almost, but not quite. You've got a rally, good strong leg in candle, and you got 1, 2, 3, 4, 5 base candles here. Sorry, 4 base candles here, and then 2 leg outs. Here's why I don't like this. This should look like a rally base drop structure. It's not. This candle right here, that is a base candle, should have been a leg. If this was a leg, this would have been a great area, 2 strong zones, we look at it, but it didn't. And so area of interest, maybe, I'm not even going to call it that. It's too messy. I'm looking down and left, I don't see anything down here either. So we're really going to wait for the higher time frames on these markets before we make any decision about what direction they're going to go in. Let's pull up on our bond market now. Again, significant move up over the past couple of weeks in these areas, both of them. So 10-year first, very quickly, came very close to this area of interest right here. Didn't quite hit it. We've now moved up, and we're now starting to form another white space area up here. So we're gonna have to look for something on a higher time frame before we're interested in doing anything different with a 10-year on the weekly perspective. But we are still in this overall downtrend. This was a little bit of a corrective action here. Wouldn't surprise me to see a little bit more corrective and then continue to move down into these areas down here. One of them would probably work for the bigger move back up again. On a daily time frame, we had a very strong move up here, very, very close to the zone that I had drawn. And again, just missed my entry point. I had my trade set at 132.03.0. And price came all the way up to 132.01.5. That's it. This area could still work. Price hasn't moved far enough away from it, right? It hasn't continued down and taken out anything down here in this area. So it could potentially still work. But again, we're starting to form this white space again, right? Price is just moving back and forth between these two areas. We need it to move out of them before we're interested in taking a trade here. On a 240-minute time frame, we had this zone down here that worked for us very well. Price has moved up from there. And again, if I'm looking up and left, there's nothing here that I'm interested in seeing. We've got to go too far over to find that, to find any potential zones there. I look down and left. The only area of interest that I have here is got this zone here, and then technically this one right here. But again, the way that I usually read these, when you have two zones stacked on top of each other, the leg out candle from the second zone, if it's significantly longer than the layout candle from the first zone, price is usually going to drop further into the area, so I'm going to delete that zone. We'll move our entry point up a little bit. I would be interested in this. It's a very small risk, so you can get away with this trade without taking a significant amount of risk on. We do have this zone formed right on top of the one that actually worked, so it wouldn't surprise me at all to see this zone right here work and continue up until we get again to one of those higher time frame areas, where then that would continue to send price back down further on its overall higher time frame downtrend. On a 60-minute chart, we have got, we're kind of stuck here. We're trading right now in, a lot of trading the past day or so in this gap area. This is a contract rollover gap, so therefore we don't put any meaning to it. Right? It's not like it's a weekend gap or a daily gap or a gap due to news or something like that. Contract rollover gaps are just, they're empty space, and we don't necessarily know what's going to happen with them unless we go look at the contract specific chart itself. I'm not interested in doing anything on this 60-minute time frame until we get down to this previously defined zone at 137.5. All right, I'm just going to skip the lower time frames here because I want to spend the next couple of minutes looking at our index markets. So for just quickly on a 30-year bond, not going to spend a lot of time here. There's no zones that we've drawn up here. We are in a confirmed uptrend on a daily time frame, so be careful of taking any shorts on smaller time frames here. 240-minute chart. We've got this area of interest right here. I would get confirmation that price is going to change in here before you take it, and nothing else above that we're interested in that's defined well enough where we would take a trade at. On a 60-minute time frame, this area here, excuse me, that did work for a trade. Just gone through. Just very quickly here, zoom in on this. Up and left, nothing. Down and left, nothing that I'm interested in taking on because we're so close to bigger time frame zones for the bond market here. All right, let's jump over to our index markets because I want to look through those three because this is where we're going to potentially see the change happen here. And I want to just very quickly set weekly context. Right, strong move up. We're in a corrective phase right now. If you look at previous corrective phases, this is almost in line with the total movement that they do. So not unexpected that you would see price change moving back up again. And the reason why, when I look at our daily time frame here, and I will zoom in on each of these to show this, we came very close to hitting this defined zone here. High probability area. Absolutely will be taking a trade in this area myself. Both would be both a day trade, and this would also be an area that meets all the criteria for my retirement accounts as well. So I'll be taking both of those if price comes back down in here. The reason why it may not, I'll show you that in just give me 1 second. The reason why it may not come back down in here is if you go to the NASDAQ, we hit that same exact zone already. So a little bit more volatility in the NASDAQ. It doesn't surprise us when price will move a little bit further or faster than on NASDAQ than it will in the other areas. Hit this overnight, or actually I think they hit this on Friday afternoon, and has moved up significantly from here. If this area stays, then you won't see price go all the way back down on the ES. You'll just have to look to get in on another shorter time frame trade, and just know that that was where the index markets themselves as a combined entity, that's where they changed direction here. Now I will say we do, technically speaking, have a rally base rally here, that if price comes down through this zone and then ES hits its area and prices in here, look for the confirmation of this. You might be able to, that might be the additional confirmation that both of those markets are going to work there. But I'll leave this as just an area of interest only, right? I wouldn't take this as just an automatic trade. And before I jump into a couple of smaller time frames in our last minute, just want to show you the picture on RTY as well. So that daily time frame, right, where if you looked at this and tried to map those same zones out, the ones you would be looking at are these ones right here that RTY has already gone through and created additional areas of interest for us here. We're really looking for RTY to get below all of this white space right here, right? If we get below this, high probability RTY is going to turn around. RTY can sometimes be seen as a risk market. So when it's gone much lower than the other markets have. So if they turn around right now, you might not see that same level of strength in RTY. So no other indications that the bigger picture index market is changing. We do have good solid indications on DAX, on NASDAQ and S&P 500, that those daily zones could hold the weekly zone on the DAX. We could see a bigger move up in the markets today. Look for that. Look for some of those areas to potentially break for that confirmation move. I'll just give you those two levels here very quickly as we end here. 240-minute time frame, you're really looking at probably this area here. Okay, sorry, this is RTY. My bad. Let me go to the NASDAQ. Pull this up. Okay, yeah, on NASDAQ, we would need to see this line broken right here. 16.4, let's call it 16.465. That breaks. That's a confirmation of trend change there. ES, that same level. We'll give you that number, and then we'll call it a day for today. Will be call it right about the 4670 area. Right? Price breaks those. You get a candle close above there. That's good confirmation. That's when your longer term longs will start working out for you. So with that, that's it for today. We will be sending out additional notes throughout the day as some of these levels, move through these areas or approach other zones. So keep an eye out for that. And I really appreciate you guys' support. Appreciate your participation in this. If you have any feedback for us, please leave a comment below or send us an email through the website, and so we can make changes or do anything that's needed to make these sessions better for you. Again, thank you all for your support. Subscribe to the channel so you get notifications when the new educational videos are released. And have a great and safe trading day. We will see you tomorrow.